Joining us right now to talk more about markets right now and how to invest is Barrow Hanley Managing Director and Equity Portfolio, Mark Giambrone. Great to see you, Mark. Thank you so much for joining us.
Thanks for having me.
Your reaction to the midterms and its effect on markets?
Yes, I think the main thing for the markets really was for us to get past the midterms without any surprises. And I think that's exactly what happened. So the good news is the uncertainty is over. We're past the midterms. We kind of got what we expected in terms of, a House going Democratic and the Republicans remaining in the Senate. So I think now the markets will look to the next thing, whatever that is, and we'll move forward.
Are there three things the market's looking at? First and foremost is the Fed, right? Because the stronger dollar has had an impact on this market. The Fed certainly influences that. Second thing is trade, right? We've seen earnings reports come out. People are talking about they're selling into the emerging markets, especially on the consumer discretionary side. They're having a hard time. And then the third thing is peak everything, right? We're at peak operating margins, we're at peak earnings, we're at peak this, peak that. So what is your take on where to position into the market? Because with those three overhangs, I don't know how the market can continuously have 20% years like it's hit for the last few.
I agree, and you hit on those. Let me take those in different orders if I could. So rates first. Normally, we'd be talking about rates more than we are, because when the Fed starts raising rates, the three steps in a stumble, generally that means that we're going to slow down a little going forward. So that should be the biggest main issue that we have in terms of monetary policy. This year we had fiscal stimulus, right, with the tax cuts. And so that really gave us some juice right at the end here, as we should be focusing on rates and rose in earnings a lot, and therefore the market had another great year until October, of course. Tariffs, to me, tariffs are this new issue that is really weighing on the market. And it's because it's uncertain as to what's happening. It's clearly having an impact on people's decisions, having an impact on costs. It's weighing on the economy. And so, frankly, I'm also hoping that that's somewhat of a political hot button, and getting us through the elections here will help us start focusing on resolving that issue.
Well, I can connect those issues to this new Congress that's coming in January. Is they will have to ratify the Mexico-Canada trade deal. Number one, and in terms of interest rates, you have a Congress that needs to get control of spending. Can that happen with Democrats controlling the House?
No way. No.
No, he was shaking his head.
Republicans couldn't have done. You think with Nancy Pelosi helping to lead the House, do you think that suddenly fiscal restraint is going to become there's no way that happens.
Well, if the Republicans in the Senate grow up and realize that there is no blank check.
I mean, markets will start getting nervous as interest rates go higher with debt now at $21 trillion, won't they?
We're paying close to $1 billion a day in interest on that debt.
Just the interest
and
on
the annual,
just the interest. That's just the interest payment.
And the annual budget deficit goes to $1 trillion in a matter of months. But again, if you see spending restraint, that helps keep those concerns in check potentially among investors.
Does this become an issue for markets?
I think it's already been an issue. Obviously, rising rates are part of the problem. I don't think we're going to see any resolution, frankly, on the budget side. So let's move back to what he was suggesting, which earnings are peaking, cash flows are peaking. What are we going to do? Part of that is I think the market's readjusted here a little bit, so we've seen the market come down some. And what's important is, we still don't see a recession coming. So although things are slowing, so a third of the earnings growth this year came just from the tax cuts. As we roll to next year, right, that third is going to be gone. It's going to be compared against. But we're still seeing growth. And I think that's important. So, yes, things are slowing. Actually, from our perspective as value managers, what we hope is that means value tends to take a forefront. When you're seeing rising rates and things slowing a little bit, there's still value in the market, but this growth versus value cycle has been led a long time by growth. And so we're starting to see a transition, we hope, within the market. So there'll still be ways for us to capture real value, but it'll be different in the ways we invest in the market.
So where is the value? What do you like right now? $86 billion in assets under management. How do you invest?
Sure. So right now we're overweight things like healthcare, industrials. We had a significant weight in financials. We have a significant weight in consumer discretionary. You just have to be careful. So there are places in the market where there's still clearly value. I mean, some of these names are still trading below 10 times earnings with nice dividend yields. It's just that they haven't been in favor.
Well, that's the financials that you're talking about right now, where they pay a great dividend, and now the overhang of the election is gone. So hopefully, that Maxine Waters and the Financial Services Committee in the House won't be a big burden.
There's new headline risk. Even you talked about it for the pharmaceuticals and the healthcare companies coming out of it. So again, it's hard to quantify, but it's risk nonetheless.
I think you have to try to separate, and it's hard, between headline risk and impact on earnings and cash flows. And so we hope, from a financial perspective, that the regulatory changes that are slowly coming through will still happen, right? And then the fundamentals may be slowing a little with the interest margins, et cetera, but we still have a good economy. When it comes to health care, yes, there's conversations around pricing, particularly on the drug side, but there are other things that are being helped, like managed care at this point, obviously with Obamacare staying in place, the Affordable Care Act, et cetera, moving forward. So you have to bifurcate between those things and try to find where the value is.
All right, we will leave it there. Mark, great to talk with you.
Thank you, Maria.
Thank you so much. Mark Giambrone joining us there.